Hey guys, welcome to another video brought to you by Total Control Traders. I do apologize for missing the weekend ticker review video. It was the end of the month and the second half of February has been nothing but craziness. We at the trading community, the TC trading channel, had the highest trade ever in end of February. So figured it was a good time to take a break, reflect, see what actually all went on, how was return. So did lots of reflection and lots of relaxing. So hope you guys had an amazing weekend yourself. And thank you for coming back to the channel. Now let's get into the business. Let's see what's going on in the market. All right, first of all, must recognize the mistake. The mistake, as mentioned in our weekend video, was on this rejection of, now this trend line wasn't formed before, on this rejection from this previous resistance zone, clearly see rejection, rejection, double or triple, depending on how you look at it. And GME running, that was a go signal for the bears. All right, so what happened from there? Now market open. Let's take a look at the closer time frame. 28th. Market opened, and as soon as it opened, straight bull. Already bull flag, another bullish move, breaking that inner megaphone middle of the middle trend line. Now there's multiple trend lines here that I'm drawing right now because we've broken through the middle two already. So I want to see what the reaction looks like at the upper trend line. So technically, if you want to keep the chart clean, you can delete the middle two, the bottom two actually. So over the weekend, what happened was we bounced from this pandemic low line, and I was saying the worst case scenario, we'll be looking at the back test of this 2008, 2009, when was it dating back to? Let's see. 2009 trend line. So worst case scenario, we'd be looking at a back test of this trend line. So we can see rejection, multiple rejection before this, another rejection after the pandemic, another rejection, and stall here before the breakout. And we haven't really came back to back test except this immediate almost back test. So worst case scenario, we could be looking at back test of this trend line, which will line up with its previous resistance and support zone. Now from there, overnight, instead we bounced from the pandemic low. This was the second possible scenario, actually more like the first possible scenario. If this were to be to have been lost, then we'd be looking at the 2009 trend line. So this was the support. We can see support from pandemic, support from November, right before the run, and then support again from the flash pullback on February 1st. So the end of January pullback. And now we're seeing support here again. So on the hourly, as mentioned, we can clearly see bull flag, confirm, bull flag, confirm, bull flag. Now after hours, we're losing the hourly, but we are extended from the 4 hours. This is an amazing 4-hour bull flag setup. We did blow right through that reverse GP from this previous high to the low. We blew right through it. So bulls are strong. Now, ideally, what we want to see is a bull flag setup from here. Touch the 4-hour 8. What does the daily look like? Just above it. So it makes sense that we touch the 4-hour 8 before the next leg up. Then I want to see what the reaction looks like towards this trend line. I don't imagine too much resistance here, to be honest. But ultimately, 4-hour trend, the last bull confirmation, still not obtained. The last time it was a breakout, fake out, or no, you can say that was never obtained. So if you look at this, the last time it came up, remember how I said first bull confidence, 30-minute trend reversal, then hourly trend reversal, then 4-hour trend reversal. 4-hour we only got over it ever so slightly before the rejection. So that was never really obtained. Now this time, we're going to want to see that higher low. Let's see where the GP brings us. All right, so ideally, we want to see that higher low in that 0.5 zone, which lines up with the lower key zone, the lower part of the key zone. Ignore all the lines, just a green zone, okay? So 0.5, lower zone, that is a must hold for this higher low. Well, must hold would be the GP. This is an ideal hold. The most ideal would be the 4-hour 8. 4-hour 8, then just continue. Or 0.5, we can still see trend reversal. GP, not so ideal, but it could just be a back test of this middle trend line. And that's why I'm still keeping it there. So ultimately, market still in a bearish trend on the 4 hours. On the weekly, we saved that weekly bull flag. So on this week, we're going to need to see follow through this week, because we did already lose the weekly 8. If we don't see confirmation this week, we'll be looking at further downside. And that's why that 4 hour higher low and then higher high is crucial, or else we'll be looking down at this 2009 trend line backtest. All right, NAS, similar idea. This trend line goes even further, 2003, and we're seeing a backtest of this trend line already. So NAS is complete different story. Already seeing this key trend line backtest. If we were to go down lower, doesn't really make sense to backtest this middle trend line, because we already backtested it a couple times already. So it makes sense for NAS to continue bullish momentum from here. NAS was the key driver of why the market went down. However, the worrying part is this bear volume last week. Comparing to the bull volume we've had so far this week, that is crazy bear volume. Okay, if we were to look at the SPX, similar idea. And that's why I haven't entered anything except one play. I'll cover that later. But I haven't entered crazy bullish play yet. You compare these bull volumes, it's just nothing ideal. So don't get tricked by this bullish engulfing, whatever you want to call it, candle. Volume is not there. Okay. All right, let's take a look at US dollar. US dollar is signaling a bearish market, continued bearish market as well, because we are still trending up. So cash is a position, especially if you're in cash for US dollars. There will be gains even in cash positions. Don't rush your trades. Look at the volume. All right, that's it for the market. First one for the hottest ticker, Bitcoin. Nice pop on Bitcoin. Now we are seeing slight rejection. No, not really rejection. Slight pullback to backtest this to 88. Volume, not so trustworthy. So similar idea. Big engulfing bullish candle. No volume. Or lack of volume. So be careful on your bull plays. Ultimately, this is a weekly bull flag that is likely to, in my anticipation, we are going to be trading under the weekly 8, because this reminds me of Amazon, reminds me of SPX. Weekly bull flags, you don't want to see a huge pullback like this. However, it is still a monthly bull flag, so it makes sense that we're up a little bit. On the monthly, I would anticipate an inside bar. I'll be very astonished if March was not an inside bar comparing to February. This is a huge range. 32,333 to 58,354. Huge range. Anticipation, inside bar on the monthly. Slowly, ideally, for bull players, you want to see sideways action, form a bull flag. Most ideal, what you want to see is a back test of this long-term trend line. Okay, the last high, the first pop ever in 2013, following by the second pop. For those who were in the market, you'll remember this one. 2017, and now this third pop, we gotta see a back test. Right, next one. We're moving Tesla back up to the hottest tickers. All right, Tesla. Oh, I did not see this. This doesn't look right. Okay, well, that's interesting. We did not trade up at 872 today. So let's look at 4 hours. But imagine that, hey? This 27%. Wow. Glitch of some sort. Gonna have to look into the details on that. But loving where we're holding on the GP from this last bounce. Holding the GP, continuation. So there is a chance, a big chance, a very decent chance on Tesla for continued bullish play. Kathy's buying. From here, expectation. Last time we rejected from roughly the 0.5. Expectation on this run, I'd be looking up at the GP, which lines up with the key zone and previous support resistance. Trend lines don't really work that well that I have seen so far on this recent trend. I mean, it took me a while, but I finally found one. Previous high, 502, support back here, and then that's where we're bouncing from. Not the normal style of drawing a trend line, but hey, this one worked. So next one up, we will be looking up at this confluence zone of this previous rejections, triple rejection, trend line versus resistance versus key zone versus GP. Makes sense that we're gonna see a reaction there. This one most likely doesn't apply anymore. Right, so potential megaphone pattern from here. Next, PLTR. This one has been the dog. Not moving whatsoever. Still trading under that day 88. But decreasing bear volume after huge bull volume pop. Anticipation, we're going to see a pop soon. Potentially 1 or 2 more, maybe even 3 more days of bearish action. Unable to push it down, just very slightly going down. I still want to see a hold of this trend line. And then from here, the pop will be nice. If it ever comes. No, I can never guarantee anything, but if it ever comes, the pop will be nice. The chart does respect fibs decently. Let's see. So we're going to draw it here. Last pop was to the 0.382. And then if we were to draw the whole thing, the whole pullback, .5 would make sense on the previous resistance. So the top of this key zone, 0.382 would also make sense. So the minimum of the expectation is bounce to the 0.382 at 31.22. Minimum. It's going to take patience though. Next one, DKNG. Congrats, DKNG bulls. Look at this. Huge long-term sideways action, depending on how you're looking at it. You know, it could be from June. It could also be from the beginning of the wedge. So July. I'm looking at it from June. This one is the NVDA that didn't play out. That's playing out. Negative earnings, huge bull volume, increasing bull volume after long-term sideways action. This one should move. 120 extension target. First target. Depending on how you draw it, this could be a much higher target actually. So first target we're looking at is 71.53. Huge bull volume. I imagine that anticipation would be that we blast right through it, go to the about the 1.272, which is at 81. So blast right there, then start pull back. That would be most ideal. Only got the first entry in. Let's see what tomorrow brings. But the chart looks amazing. We don't want to see another breakout fake out like NVDA. So let's see that follow through tomorrow. Next one, FSR. Double rejection does not look too great right now. Now a lot of people were playing this bullish today based on the bullish engulfing candlestick and the rejection, rejection from the 1-to-1, and the volume actually looked decent today. But if you look closer, today's volume was only half of Friday. And I think it was it was midday. So midday we came up to it. Then a huge rejection. So not too ideal to see. I would not be playing this for some time until this 29.25 breaks. 1-to-1, wow, off by a penny. Look at that. Off by a penny. High of 29.26. 1-to-1 extension target 29.25. Cannot get any better than that, hey? So ultimately, if we're forming a bull flag here, we're gonna need a couple more days to tell. This is an inside bar today. Tomorrow, let's see if we see another inside bar tomorrow, and then potentially maybe even another one, inside bar, inside bar, inside bar. That will be an amazing play because the daily 8 will have caught up by then. That'd be strong. So keep FSR on your top watch. Zoom, congrats. Zoom bulls. Huge gap up, continuation to run, rejection from the GP. Amazing play. Cannot get any easier than that. Look at this. Gap up, run, GP. That's your selling point. All right. Did not make it close. We're close, but we didn't make it to the key zone. 418.07. We got to 415.89, so off by $2.18. That's not a whole lot. $2.2%. Yeah, so not off by a whole lot, but GP was there, so that is your sell signal. Let's see what the hourly looks like. Still extended from the hourly 8. Looks amazing. Nice. 15-minute 8 is your guide. Algo, bounce, algo, bounce, algo. Holding. End of day, bear volume came in. We are overbought, but we are staying up there. So ultimately, I would say 30-minute 8 is your guide. If you want to be a little bit more conservative and okay to give back a little bit more gains, use the hourly 8 as your guide. That's it for the hottest tickers. Next one up are let's do the requested tickers first. Request tickers, Apple. Apple. Congrats, Rafaela. Trading over the daily 8. GP hold was key. I hope you got in today, Rafaela. Congrats. GP hold was key. Easy play, easy stop, right under 120. This wick doesn't count. This is the real low. Use that 120 as your guide. Now we're trading over the daily 8. We're trading over for the 4-hour 8. Chart is strong. A little bit lack of bull volume. However, we are lacking even more sellers. So from here, anticipation, use the hourly 8 as your guide. This should be a relatively safe play. The next resistance we're looking at, it'd be somewhere around here. Trend line. That trend line doesn't seem to line up. Why is this one all weird? So if we were to draw it to here, too close. I like that more. Generally, you want to use the most recent prices, but I guess you could do that. So let's say we draw it to here. we held. Yeah, you could do that. So there must be a second trend line. This one makes sense too. Bounce to the wick. To the wick again. Nothing. Rejection. So first zone you could be looking at would be right here, following by right here. What happened? Wrong chart. We'll be looking at those two areas. Right, next one, open. Rejection from the trend line, wicked over it. Nice hold of this low trend line, the must hold. We did come back to back test. Wow, this is a beautiful chart. Look at this. We came back to back test this key zone to the penny. 25.10, 25.18, off by 8 cents. Back test this key zone, then went straight back, held the lower trend line, and came back again and still held the lower trend line. Now we are seeing a little bit of a stall on this previous trend line. Volume is not so great, but earnings coming up March 4th. Unless volume comes in tomorrow and break us over this trend line, I imagine it makes sense that we stall over to the earnings towards this apex. It's going to be a hard trade. Congrats to John for the win on this trade. You got in, I think it was Friday or something. This trade alone, and you asked about it on the trend line, so it's 8%. One single swing. Good for you. Congrats, man. All right, next one. CCIV. Decreasing bear volume. Looks great. We're basing off. Basing off of the key zone. Let's see. Not much of a clear trend line to play off of. You could say something like that. Yeah, not much of a clear trend line to play off of. And there will be resistances along the way. How are we doing over there? All right, so we are pinned in between the two right now. We're going to see this trend line. Breakout, fake out, resistance, breakout again, support before breaking down. So this lower trend line is obviously stronger because you can see support, resistance. Now the upper trend line, the lower trend line, now the upper trend line. This is the stronger trend line. We must break it in order for the trend to reverse. Right now on the hourly, the oversold condition is cooling off without the price moving much, so that is not ideal. This could very well be a bear flag setting up. 4 hours, decreasing bear volume, no buyers to be spotted. We're cooling off from the oversold conditions. We could be setting up for another leg down. This is a trade that you don't want to be, especially given the market unclarity. You don't want to be early on this trade. At the very minimal, similar idea, wait for the break. Okay, so we're already trading over the hourly 8. Wait for the break on the 4-hour 8 or the trend line. They're lined up right now. And watch for the volume. Right now, it doesn't look like an ideal play. Triple, quadruple, 1, 2, 3, 4. That doesn't really count. So 4 rejections from this upper trend line already. Key to break. Bear volume is slowing up, losing some steam. So that is an ideal, but there's no buyers either. Next one, work. Okay. So it's in the gap fill territory right now. We just filled the gap? Doesn't look like it did. Okay. 40.90, 40.93, 94. Off by 3 cents. You can call it filled. Remember Zoom. Remember, I can't remember the another ticker. You know, it's never filled it to the spot, to the penny, but then it started bouncing. So this, you know, it can be called that it's been filled already. Volume not so great. Slight increasing bear volume. Earnings coming up on March 4th. Bear divergence on the weekly, I want to say. No. So on the weekly, you can't really see it. Looks more so on the daily. And it's not even that clear either. Slight bear divergence that is potentially already played out on this gap fill. Most ideal entry, I would say that $40 mark. You can see previous resistance, IPO resistance, and then again on June 2020. Now we're potentially backtesting it. Earnings will dictate where we're going to go. All right, next one, QS. Let's do QS and FUBO back to back. I love doing them together. They're like buddies, you know. Such huge potential, such nice returns. Same with skills. All right, QS. Decrease in bear volume. No bulls to be found yet. Earnings. Not so great. But big volume pop. So now we've been fading off. Still holding that key support. There is big potential for this chart still. We are still holding that weekly 8. Key now. Not an ideal candle last week, but that is partially due to the market. So key now, we're going to have to see some follow through ideally tomorrow. Tomorrow, Wednesday. One of the 2 days. Or else, because we're right on that daily 8, we could just start grinding down. But yeah, keep a close eye on QS. I still think ultimately, still looking up at 84, this gap fill territory. Might take some time to work out though. Volume looks like it's ready to go. Yeah. All right, FUBO. Let me add this on before I forget. All right, FUBO. Amazing. Congrats, Skychin. Congrats. Candy Sakura. Nice trade. GP hold. Don't remember if I called this out. Not going to take credit, but good for you guys. Good for you ladies. All right, so GP hold. No bull volume to be found though, so be very careful. Earnings is coming up on the 2nd, so tomorrow. I can't remember. Let me see. Earnings. Who shared the earnings? There we go. Thank you, by the way, BBQQ, for sharing earnings on weekly basis as well as daily. All right, where is FUBO? FUBO is after close. All right, so if you don't want to gamble on earnings, if you're on options, short dated options, make sure you take some profits. It has been a decent, very decent run already from Friday. This 10% move, 10% move. Okay, if you're in short dated options, make sure you take profit. I imagine your options should be up at least 100% already. Earnings should dictate the direction of this. We are still trading under the daily 8, and we are in that key zone. Could very well reject from here and then look for another leg down. Chart is still looking relatively weak. There is a weekly ever so slightly. Weekly bold divergence setting up. And let's remove these. Where is it? Right here. All right. Yeah. Slight weekly bold divergence setting up. So it could be a very good weekly bold play. Oh yeah. Looks decent. Well, at least you have an easy stop if you're in from Friday. Your stop will be this double bottom. 33. 33.3. So put it under the 33 mark, you know. Easy play. If you want to give it a little bit more room, even put it under 30 because there is a key support down here, previous resistance and key support. But yeah, if you're playing shorter term, 33 would be the mark. All right, next ones up are the top plays. I'm going to run through the next few quite a bit because I do want to run through the Wall Street bets that we missed this weekend as well. So cheers. All right, Amazon bouncing. We lost that key support. We lost that key zone. Today's bounce, not convincing a volume. Overall, still looking bearish. Let's see where we hold from here. Still trading on the daily 8. Overall, not looking so great. Next, NVDA. Alright, NVIDIA looking a little bit better, holding that lower trend line, decreasing bear volume, and we're now looking at lower wicks forming, so we're going to have to see some buying pressure come in ASAP. This last daily breakout fake out on this long-term trend, not so ideal. From here, we're going to first sign to see is we want to trade over the daily 8. Bull flag, obviously no longer there. Let's see the next couple of days. We're going to want to see the bull volume come in. Overall, right now, sort of in the middle of the trend. It could be a low risk entry. You use the stop of, what is that, Friday, Thursday as your stop out. Key trend line to hold, 528.65. Next, workhorse. So we played this, and congrats to those that played it. We entered around 1460-ish, I believe. Yeah. Again, never catch the bottom, right? But whatever, 1460. Wanted to see that bounce first. And next day we entered. And then the day after, it popped on news of contract not being final. Popped to 19 some, and we sold at high 18s. So well worth the trade. From here, I see bull volume coming in. Ooh, nice earnings. What's the after hour look like? Am I missing something? Oh, after hours didn't move. Was it pre? Workhorse. I don't see it. Okay. Before open. Okay, so that was before open. So maybe that explains the little bullish momentum today. But if you're looking at this, you know, on the 1869% beat, and this is all the move that I got, yeah, not gonna trust it. Overall, it is a daily bear flag forming. Nice, decent bull volume is coming in, but it is decreasing. So let's see what the next couple of days bring. Don't trust the move right now so far. Next one, ABNB. So it was very tempting to get in on Thursday. Really tempting to get in on Thursday. My goodness. 180. Amazing. I was going to enter like a trade like right at 180.1 or something like that. But decided not to because of this head and shoulder play. There is still a potential there. Bottom fish, even if you did 181, say, 181 yesterday, Friday bounced to 214. That alone was like a 15% trade, more than 15% trade. So I should have stuck to my guts and did it, hey. But hey, Still a head and shoulder potential forming here, especially if we're looking at the weekly. It is still a bit weak. Decent, what is this? Decent bull volume coming in. Monthly, no monthly 8 yet. Right, so from here, looking like a little bit lack of follow through. Decent bull volume, cannot push it up. Has me a little bit more worried. I imagine there is profit takers coming up. If you imagine the IPOs, you know, people who bought from back here, they're up now 32%. They are seeing there is a little bit of a struggle. Potentially selling from here. We did break under. The channel got moved. One sec, guys. Delete that. Delete that. Right. That looks a lot cleaner, hey? Channel's lower trend line got lost already. We could potentially be looking at most ideal zone. I would still think this GP, which lines up with the key zone, which also almost lines up with one-to-one extension target from this ABC or AB, and then we're looking at C. All right, so be patient on this one. Next one, skills. Congrats, skills, bulls. A little bit lack on bull volume, but overall we did bounce to the 0.382, and there's rejection from this lower trend line that was previously support, now becoming a resistance. Second rejection so far. Still lacking bull volume. Debated on this play today, but after that 46 trade on the last semi-monthly, decided to let's refocus on doing golden setups only. So skipped out on this one, and towards the end of day, I believe we saw profit taking. Yep, big profit taking towards the end of day. Hour 8 is your guide. Next, BIDU. Nice back test of the previous key zone. Hold of this 0.5. Yep, held the 0.5. Now, bull volume lacking a little bit. There was a bear divergence that was forming on the daily. Slight, well, strong but slight because of the time frame wise. So this is more like a 4-hour bear divergence. Yeah, 4-hour bear divergence likely to have played out now. Watch for that higher low to form. Right now is still bearish. If you're looking for bull entry, watch for a hold of this GP, which is another back test of this previous key zone. Next is W. Congrats, W. Bulls. Now, I'll be on this trade since I checked today. It was February 10th. Obviously, this inverse head and shoulders didn't pan out. But the telltale sign was the volume on Thursday. However, this was a little bit more tricky. It was earnings day, negative earnings. It was green on some time frame, red on some time frame. So if you look at the hourly on the 7:30 candle, it was green, huge volume. 30-minute green as well, big volume. 15-minute, not a whole lot. 15-minute is actually bearish volume that was outweighing the bull. So then, got me a little bit confused. Let's look at the 5 minutes. 5-minute, back to greens, but huge upper wick, followed by low bearish volume. This to me was the convincing sign, even though that we did immediately break down under the 5-minute 8 as well as the 15-minute 8 and whatnot. But that to me was the confirmation that we will be seeing continuation very soon, especially that we are playing the monthly bull flag last week. Considering how far the market has pulled back last month, or the last week of last month, this was a very good bull flag setup, and now we are seeing continuation. Yeah, today, tomorrow, gonna want to see continuation, and we already got it today. Even though we started off as a low bull volume. Oh, I didn't even see this. 7:30, where is that? 7:30. Right, you look at this, low bull volume throughout the day, just grinding, algo, 5-minute 8, bounce, never stopped. Then boom, 12:40, volume came in. Then towards the end of day, volume came in again. Monthly bull flag, guys. Don't lose sight of this. What did I say? What did I say in here? Don't lose sight of W. 818. 818, guys. And let's see. Just out of curiosity, to the end of day, that's 11.19% run since the call out. Hope some of you got in. On the monthly, the forecast, the projection on this bull flag, if you were to do, same as usual, low to the high, to the higher low, the projection is going up to 550, which makes sense to me. Now we're gonna have to see the bull volume come in. One of my top plays. Next, APHA. Still in that triangle daily. My goodness, there's a lot of drawings in here. Okay, haven't lost a GP yet. Rejected from the GP. Let's just move this back one column. Move this forward. Okay, not such a clear chart. Bull divergence, bounced back, forming the lower trend line, rejecting from the upper trend line, slight rejection from, almost touched it today, but rejection again. There is no bull volume coming in, but given where we are in the chart, if we do come back to this lower trend line again, we'll be looking at potentially entering for a long position. I like the chart. I like the potential. I like how the merger will bring them closer to CGC's market cap. Not gonna go over CGC. There is a offering on them, so they are generally gonna be weaker than APHA. Let's take a quick look. Oh, it's actually stronger today. All right, chart is still weak though, trading under the weekly 8. There, daily 8. There is no bull volume either. So let's take a look at AAL. Decent bull volume early today, followed by profit taking. Bull volume is on the daily, it's slightly diminishing. So far is still a bull flag. Gonna need to give it another 3 to 4 days to see how this plays out. Ideally, you want to see a bull flag without losing the daily 8. From there, we'll be looking up at another leg up. All right, let's do the WSB ones. My favorite part of the day, because it brings new ticker to our realm of discoveries. No, sorry, GME. All right, small pop today. I love how when GMC, when you say small pop, is 28%. Oh man, what a crazy chart. So we played this back here, 313%. I think the trade itself ended up being something like 1,000%. And my trading mentor, Steve, he got something like 4,000%. But yeah, it has been a fun ride so far. Big bear volume, lack of bull volume. Would anticipate a little bit further downside from here, but we're gonna have to see whether there's a bull flag setup. Give it another day or two. Dog's going crazy there, running around. Next is IPO. Nice, decent bull volume coming in after low bear volume. Trading right at that daily 8 right now. Holding the point after the hold of 0.5. Do I see a key zone here? Yes, I do. Oh, wrong one. Yeah, makes sense. All right, so rejection, rejection. No, not a rejection. Support, 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 support. So clear key zone we held from here. Based on the bull volume, would be anticipating further upside. Now, when I looked at this earlier today, I also drew a channel, a long-term channel that we can clearly see that it's been in, and a key trend line that we can clearly see that it's been support and resistance as well. So these are key to pay attention to. Today would have been or Friday would have been a nice day to get in, because we lost that trend line on the channel, lower trend line, ever so slightly, got bought up immediately on Friday. Decent bull volume too, that is the key. Then today we saw gap and run. Based on the volume, would anticipate follow through tomorrow. You're going to want to see the follow through breaking over the 88 tomorrow. So IPO actually looks pretty decent. Might add it to the play. Next one, EGI. Let me make a note here. IPO. IPO. Alright, EGY. Similar idea, long-term channel. We are seeing a rejection today. No notable volume. Doesn't seem to backtest previous highs. When it runs, a good runs, eh? It ran, backtest, did not backtest the previous high. It ran, came back, did not backtest the previous high. It run, yeah. Don't think it'll be coming back to here, but there's a chance it'll come back to here. Not really any clear areas. The only one I see is probably around there. So let's see if it comes back to backtest here. If it drags out slowly, it could be over here. That would make sense, you know, lines up with the lower trend line of the channel. I also want to see something if it's 0.382. And it's right about there. Yeah. So it's going to take some time for this play. If we do see rejection continuation, rejection follow through tomorrow, we'll be anticipating further downside towards this key zone 0.32. Next, AMC. All right, gonna finish it off. AMC, AG, Rect, and NG. AMC, nothing notable. Trading over the 88. Huge rejection from the 0.382. No bull volume. Earnings coming up on March 4th. I imagine earnings gonna dictate which way to go. Next, AG. Trading under the trend line now. So, lost the trend line. No notable bear volume. No divergences. No clear plays. Only thing I can see is, based on the loss of this trend line, I would anticipate further downside to backtest this previous trend line. It might take some time. You know, it could just go like halfway, or yeah, this part makes sense. It could just go like right here, previous low, come back up, and then back test here. Okay, let's draw that out, see if it works out if we ever come back to revisit this chart. Something like that. All right, next one, Brent. That has been the top watch for some time, but the chart has never worked out, so good thing we never played it. But now it's getting some traction. Very interesting chart. Gap up, big sell off on huge bear volume. Gap up again, big run on lower bull volume. Yeah, I think I might skip this play. It's a hard chart to read. Earnings beat by 24%. Head and shoulders never played out. You normally would expect this to play out. No, it didn't. Volume was even there too. Yeah, volume was in the bull favor, and yet just a tiny breakout fake out. Skip. Know that if you are playing it, you could be looking up at the GP. Risk to reward from here, not really worth it. Your entry would have been at the bottom of this key zone, 1870 to the penny. Yeah, 1870 to the penny. Key zone. All right, missed it. Nope, no, not interested. Next, NG. All right, so we are coming back to backtest this lower trend line of the channel again. One. Didn't touch. One. So we had two and we'll call it half, 2.5 rejections from the upper trend line so far. 1, 2, 3, 4. Now the fifth support. I would imagine this to be a relatively stronger support. Key zone, we're not there yet. Okay, it is not letting me drag it out. There we go. Oh, we are right about there. Let's draw this more accurate. Okay, those are wicks. All right, we're right about there. 819. 819. We are right there to the penny. 819. See, 819 here, high of the key zone, and the low of this day. I don't know if you can see it, but up there, there's 4 numbers, 4 red numbers. 819 is the low, the L819. So this could be a good play. How's the volume? Not so great. So I would say most ideal entry is actually going to be around that 790. Yeah, flush $8, 790. Find the support. Watch the volume. Bull divergence already forming on the daily. 790 would be an amazing entry for a bull play. Slight bull divergence on the daily. All right. I think that's it. NG. Let's see if there's any more. Nope. All right. That's it for today's video. Thank you for watching. Don't forget to give a thumbs up. If you're looking to build that first pot of gold or enjoy the content of the videos we provide, please consider subscribing to our channel where we provide new videos daily. Also, check out our website at totalcontroltraders.com. We offer 7-day free trials to our trading platform where trading ideas are shared and charts are reviewed live. Hope you guys stay safe and be in control. Thanks for watching. I will see you in the next video.